And it's so ironic how the Democrats wanted to say how awful Trump was, how Trump would do all these bad things, yet they're the ones doing these things, right? Good afternoon, Outliers. How are y'all doing today? Happy Tuesday. Hope your day is going fantastic. Quick housekeeping items for the week. I will be out all of next week. I encourage you to be so as well. One thing I would like to point out is when you're going on vacation, don't trade. Well, I've had this discussion many times, right? If you are in a place where you can't put this in part of your daily routine, then don't trade, right? Of course, you're going to miss trades. That happens, right? But it's much better from a trading psychology standpoint to just sit out and miss some trades versus trying to make up the fact that you're not at your desk, not at your phone, wherever you normally trade at, and having your same level of analyses. I mean, if you're already doing things on the go, then shouldn't make much of a difference if you're on vacation. But don't trade on vacation, right? It is. I'll give you one of my stories of trading on vacation. I don't remember what year it was, but I took my family to Disney World, and this was when I was having my gold meltdown in my account. This was the second time I blew up my account, and gold was in this very obvious downtrend. Like it was so impossibly obvious that everybody could have seen it. Now you've heard me tell this story many times, but I was buying everything that I possibly could: GDX, GLD, GDXJ, Dust, anything related to gold. I was buying it. Now, reason being was because I was following this person on Twitter, who at the time I thought was a genius. Turns out wasn't. No one to blame but myself, really, at the end of the day. But they were saying how you better buy, all the gold you can right now, because gold is hitting a generational bottom. It's only going to go up from here. So anyway, I buy all this, and then I guess a week or so later, we had a planned vacation to Disney World, and I'm just watching as every day gold is going down more and more and more. All my calls are losing value more and more and more, and I'm just like, dude, this super sucks. And I remember looking out the window at Disney World, and there's this hot air balloon thing over at the Disney Springs area, and looking out our window at that and thinking, man, can't believe I blew it like this. Right? Every time I checked my phone while we were on vacation, it was like money was evaporating out of my account, and it sucked. And I don't want you to do that, right? I couldn't enjoy the moment because I was stuck looking at my account, really, honestly, when I shouldn't have been. But it's good to see everybody. Goran, Peter, Jean-Louis here. Mike is here. Michael Wales is here. And Jason's coming from Houston. So I don't know if y'all know this, but I live up in the Dallas area. And people in Dallas and people in Houston kind of don't get along. It's a thing. I am on record as calling Houston the armpit of Texas. No offense, Jason, but I can't stand going to Houston. It's too big, it's too sprawling, and it's way, way, way too hot for my liking. But you probably say something just as awful, maybe even worse about Dallas. That's okay. Good to see you, Tug. So, there's a lot to be said right now out in Trump land, because Teflon Don just keeps it coming, right? This article or this video is called Trump Just Won, no longer a felon, right? Remember the Democrats trying to say how everything that Trump did was illegal. They're going to put him in jail for everything, right? They tried to say that his Mar-a-Lago estate, which is worth like $1 billion, is only worth 18 million, right? They tried to say that was the thing and put him in jail for that. They tried to say that he and Stormy Daniels had this whole thing going on. I don't know all the details, but I do know that at one point he was convicted. But it looks like the Teflon Don just had some good news. Let's see what this says here. Oh, by the way, the whole Trump dance thing, I've been doing that with my kids for the last couple of weeks or so, and I didn't know it was a meme. All right, get to the story here. Enough of my dancing.
for his 34 bologna sausage criminal charges. They lost again. I'm just going to give you a second to leave a like on this video because, I mean...
Yeah, and watching all this go down, we all knew that they were doing whatever they could to come up with any reason to charge Trump. The lawfare was obvious and disgusting. And it's so ironic how the Democrats wanted to say how awful Trump was, how Trump would do all these bad things, yet they're the ones doing these things, right?
This is, you know, again, all this proves is exactly what we all knew. They never intended this to be a real trial. It was complete garbage. By the way, you can celebrate with our...
Hang on, we're going to skip his ad. But like, they just tried to make people not vote for Trump. Yet what they did was galvanize the base to vote for Trump.
Trump sentencing in hush money case. Judge Merchan delays Trump sentencing after his election win as prosecutors now evaluate the impact on hush money case. That means it's over. They now have 7 days to try and they're just dragging this out, but it's done. It's over. This decision follows recent electoral victory over Vice President Kamala Harris, leaving the case's future in question. Prosecutors were expected to inform the judge on Tuesday whether the criminal case involving falsified business records allegedly should proceed or sentencing should be dismissed. Trump's legal team has pushed for dismissal, which obviously they should do, citing the electoral win as a complicating factor. Manhattan District Attorney's Office had opposed this request, but asked Merchan to delay his ruling to evaluate the case's viability post-election. There is none. You're not convicting a president-elect. You shouldn't have been bringing this ridiculous case in the first place, and the libs are melting down again. Trump was convicted in May of 34 felony charges and falsifying business records. The charges stem from a $130,000 payment made to Michael Cohen to allegedly Stormy Daniels before the 2016 election. Merchan granted the DA's office just 1 week to assess the situation. If the case proceeds, Trump's sentencing could be delayed until after he leaves the White House in over 4 years. Prosecutors have indicated that any potential jail sentence would not be served during his presidency. 2 separate federal cases against Trump are also expected to be dismissed, given his ability to influence the Department of Justice, which traditionally does not prosecute sitting presidents, which this leaves Trump's legal fate uncertain, but significantly impacted by the return to his White House. I mean, this is from, the New York Post last night. Manhattan District Attorney Alvin Bragg will decide whether to delay the sentencing for Donald Trump after his conviction on charges for hush money. The prosecutor could move to pause the sentencing, which is what they did today, for concealing a payoff. Bragg could also push to dismiss the case entirely. They will dismiss the case in a week. Manhattan Supreme Court judge...
I'm not sure if they're going to dismiss the case. I don't have any idea. This is not my wheelhouse, but I will tell you, it is disgusting to see these people over and over and over again try to shut him down. And now they're on the other end of it and they're like, it didn't really work. So now we kind of drag ourselves out of the situation here. Just like I'm going to drag us right out of this video. All right, Jason, I am glad to hear you're here in the great state of Texas. Glad you made it. All right, let's go over to our market analysis. Okay. Welcome to the OVTLYR Trading Room. This is smart trading made simple. This is where we save time, make money, and start winning with less risk together as a team. And for those of you who don't know me, my name is Christopher Uhl. I've twice been awarded top 100 people in finance. I've been successfully trading since 2009. I'm a partner with OVTLYR, and this is my style of trading using the OVTLYR data, and I call it the golden ticket trading strategy. So how does OVTLYR work? Well, it's a 4-step process. OVTLYR monitors how investors are reacting to changing market conditions, news, price movements, and the economy. OVTLYR determines if investors are acting irrationally fearful or greedy, and by how much. OVTLYR gives buy and sell signals when those irrational behaviors reach an extreme. Number 4, allowing you to get into the stock before the OVTLYR move happens. So let's jump over to our member highlight of the day and look at our Discord. The Discord is closed. Hang on. All right. So in the Discord, you guys are pretty awesome, right? Mikey Mike had a question that I completely missed yesterday afternoon, so I apologize for that. Is there some trading reading video that dives deep in the details about placing and moving ATR lines around? I'm not getting it. Did I miss a video somewhere? Yes, my dude. So I know he's already checked this out, but if you go over into the VIP Investors Toolkit and then go up to the Ultimate Trading Power Pack, I have a step-by-step set of videos here. And number 4 and number 15 for that. No, 4 and 8 are about using the ATR. Now, you can find these on YouTube if you really look for it. It's going to be almost impossible for you to find.
You got to get out.
Or you can grab it inside the VIP
down
Investors Toolkit. Makes it
15%.
super easy for you. We even clipped it down
or whatever
to
before you decide, you know what? Maybe.
Sorry, that was playing in the background. We even clipped it down to where we specifically talk about it. So these videos are for you, available anytime you need them, for sure. And this is by far the most in-depth training I've ever done on my strategy. So definitely check that out there. Going back over to here, Mark decided to write another novel. He's talking about all kinds of big updates coming in OVTLYR, so it's really great here. Bob was joining in the conversation. Mahesh couldn't make it today. And then Wes came through and was explaining to Mikey Mike all about the ATR lines. And I really appreciate that. So I gave him a little bit of a "you rock" from Trump. And then absolutely helps giving me lesson numbers for sure. Good. Then over in the Share Your Big Wins section, Tug says everything you want is on the other side of fear. So Jason and Mikey Mike were talking about the learning curve. And I totally get that, right? It's I'll be honest with you, it's difficult on this side of it, right? Because it's like I don't know how much I know. And so the teaching aspect can be a bit challenging for me sometimes because I'm more in execution mode. But especially on these times right now where we're not trading, it is perfect time for education. So whatever questions you have, I'm all ears. I'm all here to help you out. I always like to say, I don't have to do this. I have the opportunity to do this. So let me help you out in any way that I possibly can. So of course, let us know what's going on in the Discord, share your stories, and tell everybody about OVTLYR as well. Be sure you hit the like button. I know you're already subscribed. Let's go take a look at the market. Now, yesterday, I was telling you how the market tells you which direction it's going, right? What I want to see is the 10 over the 20, price over the 50. The market's going to tell you which direction it's trending. So right now, we had this big post-election bump up and then a pullback. And we're basically sideways from that first day. It is potentially going to cross over, by the end of today over the 10 EMA. Now, one thing to note, and you can definitely see that here today, is that the headline of the day may not necessarily be 100% true, right? Early this morning, I saw the market was down and it was saying how Putin is threatening nuclear war, whatever, right? I personally ignore those type of headlines. Like, I don't care. I really don't care. All I care about is what is the stock market doing. And by the end of the day, which is when I trade, which is when I think you should trade too, a lot of those fear-mongering headlines, they're inconsequential. And so by the end of the day, they're nearly it's nearly back to over the 10 EMA. In fact, let me go to CNBC real quick. Yeah, NASDAQ pops 1%. This morning, it was an end of the world type of article. This morning, the end of the world type of article. This afternoon, NASDAQ pops 1%. Shakes off geopolitical fears. It's like, don't even worry about the news. Okay? Don't even worry about the news. Focus on price, because that's what pays at the end of the day. Price is all that pays. So we do have the 10 over the 20, price over the 50 right now. 10, 20, 50. Now, my rule is to wait until it closes over the 10 EMA to start trading when it closes under the 20 EMA. Closed under 2 days ago, not quite yesterday, really close today. But does that mean everything is hunky-dory, ready to roll? Well, let's go take a look at market breadth. When I look at market breadth and I slam this all the way to the right, market breadth has contracted considerably, right? So the 10 EMA is the red line. The green line is our bull list percentage. And you can see it's not quite crossed over, but it's coming really close. I do not think that this is going to cross back up. I'm thinking it's more likely to cross back down, especially when you look at the bear list having 60 new sell signals today versus the bull list only having 14 new buy signals today. So to me, this is screaming like market breadth is about to go negative here in this case. So I'm not going to be trading today because the market trend and the market breadth need to be in agreement. And I mean, it could totally turn around. Absolutely 1000% turn around. But I'm not willing to take that risk just yet because we don't have a great confirmation candle here. And there were 2 that passed on my screener today. I went ahead and I looked. First was MetLife, and the second was PEG. So when you open both of these now, this is so cool. You can actually see the sector breadth on these. So if we look at MetLife first, you can see the sector breadth for the financials. And my rule here is that when it goes over 75% and then stops going higher, that I get out. So it went from 71, 4, 76, 77, 76 again, 74 today, right? So it went up. Where's that rule at? Yeah, that right there. It went up over 75% and is now coming back down. So for me, that is a do not trade financial. So I wouldn't have traded MetLife anyway. PEG. This one here, market breadth has not quite reached that point yet. This is in the utilities. But let's see, today's heat map is G2. Yesterday's heat map was G0. So honestly, this one may have set up for me. This one stock may have set up for me, but I'm not ready to take on any new trades right now while market breadth is basically collapsing at this point. So I'm going to hang out and not make any trades. Jason says, to clarify, in the EMA, we only look at the daily chart, not the 5-minute or 30-minute. So Jason, everything I do is on the dailies. Now, I may occasionally look at the 5-minute charts intraday, right? If we're trying to get an idea of, is the stock about to hit our stop loss or what's it doing intraday, I'll jump over on the 5-minute charts at that point. But like 99% of the time, I live on the dailies. I live on the dailies. That's just how I trade. Now, if you are somebody who wants to day trade, you may live on the 1-minute candles, right? It's just my personal style. That's what I like to say. Plus, all the outlier data is built on daily candles, just so you know. All right, so I'm not going to be making any trades today. However, I'm not going to leave you out in the cold. We're going to cover New Trader, Rich Trader, right? I think we're on chapter 11 at this point, and this is one of my top 5 favorite trading books that I recommend people pick up. It's the best $8 you'll ever spend. Mikey Mike, I think he just finished this. Mikey Mike, let us know. Was this worth your time to read through this one? But what I'm doing is I read this ages ago, and I worked with the author Steve Burns early on in my trading career. And it's fun to go back and see these highlights that I made literally ages ago. I would tell you at least a decade ago. Part 3, methodology. Chapter 11. Most new traders quit. Rich traders persevere in the market until they are successful. The best way that I could describe that to you is, and I've told this story a few times, I'll sit on the couch one day and my son goes, Dad, how long are you going to be trading stocks? I'm like, literally until I stop breathing. I mean, why would I ever stop? It's not like I have to go dig ditches, right? It's not like I have to do anything manual. It's not like I couldn't do the same trading that I do today that I did 5 years ago that I could do 10 years from now or even 50 years from now, right? Trading is the hardest way to make easy money, is what people like to say. But truly, there's no reason not to trade, right? When you have the ability to, when you have a way to make money, by all means, you should trade until you can't trade anymore. Peter says, next one should be the complete turtle trader. Let's do that. I was actually thinking about that today, specifically because Mikey was asking about the ATRs, and I got that rule from the turtle traders. So that is definitely something I think we will pick that up next time. Really good idea. Still a bit more left. Well, let's work on that today. The 10, 21, and 50 day. Oh, here's the rule. This is what I've been looking for a while. Okay. The 10, 21, and 50-day moving averages seem to be the ones that affect the stock price most. 10, 20, 50. Sound familiar? When he expanded his charts for long time frames and looked at the price action of the stock indexes like the S&P, Dow Jones, and NASDAQ, it looked like the 100-day and 200-day also came into play as lines of support and resistance. It seemed like if a stock or index broke those lines, it was hard to get them back over or under them, possibly signaling a change in the trend. It was fascinating. Stocks of smaller companies seemed to move faster than larger companies. He also noticed large companies were more likely to be range bound than smaller ones. Bollinger Bands caught his eyes. There's so many different indicators, right? Bollinger Bands, MACD, RSI. I don't want to, especially when you are a newer trader, I don't want to suggest going down the rabbit hole of indicators, because you could go to till you couldn't even see your chart anymore. You could fill it up with indicators. So he talks a little bit about different indicators here. The correct buy signal seemed to be on a pullback to support or high volume breakout to new highs. And the hot stocks he was eyeing, the pullbacks were usually at the 10-day moving average, right? And that's what I say is keeping things on the north side of the 10-day moving average. That goes along exactly with that. Stock prices weren't based on a company's underlying valuation. No. Whoever tells you that is smoking something. Instead, prices are a composite of all the traders' opinions about the future expectations of making money on the stock. Could fear and greed drive prices more than a company's value? Huh. Tie that into OVTLYR right there. He was a man on his mission, and he jotted down key lessons on growth investing. Trade stocks with double-digit earnings year over year. I don't look at that. Some people do. The general market direction determines the direction of your stock. The general market direction determines the direction of your stock. Always start with the market. The market tells you where it's going. Only trade the leaders in the hottest industries. To guarantee they're liquid, pick stocks that trade at least 1 million shares per day. Greater than 1 million average daily volume, right? These are not my rules, okay? I learned from the greats. And then all I did was trade them online for everyone else to see. That's really all I did. Look for stocks that are close to all-time highs and have great support. Stocks that have new products with heavy consumer demand or a new business model with an edge in an industry should have the highest earnings expectations. Think of like Apple, Amazon, Nvidia, right? Those areas have seen tremendous growth, right? Tesla, those are the type of companies he's talking about. Stay away from illiquid penny stocks. Trade stocks on major averages, major exchanges. Cut losses on a stock's price at predetermined amounts. 7 to 10% maximum with position size, 10 to 20% of total capital. Never invest in a stock that is at the beginning of a downtrend. So, okay, at the beginning of a downtrend. Where's my cheat sheet? The 10-day EMA is an indicator of the short-term trend, okay? So if you find a stock that is closing under the 10 EMA, the short-term trend is down, right? The short-term trend currently is down. So what he says here is never invest in a stock that is at the beginning of a downtrend. So it needs to be for sure over the 10 EMA. Never bet against government taking corrective action in the economy. To win at trading, you must think and act like a winner, not a whiner. A trading system success is directly influenced by a trader's discipline. Listen and learn, but also verify the source of whether what you're hearing. Listen and learn, but also verify the source and whether what is being taught will work real time. So, caveat to that. My early career in trading was really frustrating. I was selling lots of calls, selling lots of puts, and the people who I learned from, basically they said, hey, when the market's going up, sell calls. When the market's going down, sell puts, because the market always corrects. The market always goes back to, gosh, I can't remember what they'd say. Like the market always goes back to the mean or back to the average or something like that. And I totally bought into their methodology. And they were big advocates of the efficient market theory. The efficient market theory basically says, and for those of you who don't know, the efficient market theory, let's go down that rabbit hole for a minute. The efficient market theory says that a stock's price has an equal opportunity to move one way or another, right? Imagine that this is today's price, and it could go anywhere in between here, okay? Think of a bell curve at any point in time on a stock, okay? But what people have learned in practice is that the efficient market theory is not real, right? However, imagine for a moment with me. See if I can do it. That's not going to do it. Hang on. No, stop. Delete. No, hang on. Remove this polyline. I'm going to have to draw. Okay. Imagine for a moment that the efficient market theory says at this point here, you've got an equal chance of moving in anywhere in here. Okay. And so far we have, right? That's what the efficient market theory says, that there's a probability assigned to it going to this value, and it is just as equal as going to this value. There is no difference in between. But the problem with that is all the times that you have seen a trend. Anytime you have seen a trend like this, right? Anytime you have seen a stock move this, right? So let's say this is the beginning of that efficient market theory, right? You could say it'd be like this. The efficient market theory can't comprehend a stock moving completely 100% outside of these arbitrary bands, these arbitrary ranges that it wants to put in place. Let's see if there's any better visuals. And I gave up listening to them and decided I was on the complete wrong track when I heard them say specifically one day that trends don't exist. And reversion to the mean. Thank you, Brian. That's what I meant to. I don't know why I couldn't think of that. Their thought was trends don't exist. How can a trend exist if it's going to revert to the mean, right? The mean being equal. Let's say if the stock price is 100 and it moves up to 101 and back to 100 and then 99 and back to 100. Their whole theory is stocks revert to the mean. That's the efficient market theory. And then they tried to come up with this cockamamie data point where they said trends don't exist. And they said the likelihood of seeing, X number of days in a row where the stock is moving in one direction, like how many times does it move 2 days in one direction, 3 days in one direction, 4 days in one direction? And they didn't want to take into account the fact that, you know what? It may not be all that often when stocks go 1, 2, 3, 4, 5, 6 days in one direction. That may be one time in every, 500 candles. But they really didn't take into account the fact that, oh, wait a minute, it can still have a down day, can't it? And then continue on its trend. And even still have several down days and then continue on with its trend, right? The efficient market theory has been disproven time and time again. Brian says, prices do revert to the mean over time, but you cannot know when it will change. They failed to mention that. The bell curve is real. I suppose if you look at it on a broad enough time horizon, that this will eventually go back to the mean, right? But if we're looking from over the last year, November last year to November this year, I'd say that it's, is it possible? Oh yeah, for sure. Right? Imagine this is the bell curve. Right? Is it possible that it could come down into here? Yes, absolutely. But the fact that it's like been outside that expected move the entire time kind of debunks it almost every time you look at it. I don't know, Brian. I think that rather than looking longer term, I think the efficient market theory could work in a shorter term, right? Maybe in like a 2-week time frame. But even then, you get those outlier moves. And here's the thing that's hilarious to me is that when it has a 3 standard deviation move, that's equivalent to 1 in 10,000 times, right? 1 in 10,000 times will it ever move like that. And I remember getting to this Twitter argument one day back when I actually cared about that kind of stuff on the internet. And this person was like, "Oh, this is the second time this year that it's had a 3 standard deviation move." And I replied back, I was like, "You realize that's a 1 in 10,000 year occurrence that you just said has happened twice this year." I mean, could it happen? Yeah. Or your data is completely flawed. The mean would change over the course of the year, not back to beginning year start time. Or I just don't have a good representation of it graphically, because everything that I've seen is like this right here. Okay, maybe not. It's like this right here, where it says if this is your 0 point, then it's as likely to go up to, let's call it 10 over or 10 under at any point during that time, right? So it's not necessarily that the average changes and moves up with it, but that from 0 point to today, it is as likely to be anywhere inside of this range as possible. Your vote is flawed data. Yeah, I would agree. I would agree. All right, let's go back over this. Okay, don't start trading real money until you have done due diligence on your system. Never trade without a written trading plan. Reduce your risk of ruin and still making an acceptable profit. I think you meant to say like but or and. Your system should show your equity curve growing in past backtests or paper trading over the course of a year. Have an accountability partner whom you can talk to about your trading. I'll say, having you guys and ladies actually has made my trading way better because I have to be accountable to you. But isn't that the difference between possibility and probability? I don't know. Brian, you know what'd be really cool is if you and I could have a cigar and a glass of whiskey and have this kind of conversation one-on-one. That would be really cool. I'd love to do that sometime. And anyone as well. This is my jam. Keep a trading journal with as much detail as possible. And I couldn't agree more to that because by having that trading journal, you can always go back, just like I did last week, and reference those trades and be like, okay, wait a minute. There is a pattern here, right? There is something here. There is something to this point. Maybe. And then you can test your data, right? And you'll never do that if you don't have the data to look at. New traders will be tempted to give up, particularly when they see that the first few years are more about studying and learning rather than making money. But here are some compelling reasons not to give up on trading. It'll teach you about yourself. It'll make you better in another aspect of your life. It can create a consistent stream of income, and nothing else offers the same level of control of your personal finances and future. So yeah. Great book. Super stoked to be able to share this with you. And of course, want to make sure we do this every single day, that we're not trading, to make your life a little bit easier. Brian says, sounds like a plan. OVTLYR whiskey night out. Let's go. Don't forget, next year we are Oktoberfest OVTLYR meetup in Munich, and Sebastian's hosting us. That's the plan. I think Sebastian's also paying. As far as I know, that's the plan. Sebastian, let me know if that's not the plan. Tug says, now we're talking cigars and whiskey. Here we go. Thank you so much for being an OVTLYR today. I want to make sure to help you every single day by helping you save time, make money, and start winning with less risk together as a team. Don't forget, we are having a Black Friday sale starting next week. It is going to be the lowest price we have ever offered on OVTLYR. And if you have a monthly plan, you're going to want to upgrade to the annual plan because you're going to be saving like, I don't know, 66% or something ridiculous. So definitely look for that in the near future. And let us know if you need anything over in the Discord. Tell everybody you know about OVTLYR. Hit the like button, and I'll see you right back here tomorrow. Talk soon.